SwissBorg is now the official partner of my channel, so you can buy, earn, stake, sell, all in one secure mobile platform. Download using the link in the description, deposit €50 or more and you'll receive up to €100 worth of their native token CHSB. SwissBorg! Hello everybody, welcome back. So we're going to do the commodity click. That's right, we're going to think about oil and, well, I suppose traditional markets, but we'll start with the DXY, alright? So I don't believe that the DXY is going to be finished until it's finished, right? And what I mean by that is that until either the other central banks out there, like ECB and Bank of England and whatnot, until they decide to go harder than they are at the moment, which is not that hard, or outpace America in their aggressive stance and fight against inflation, which they can't really because their hands are tied because of the position that they're in with the Russia-Ukraine scenario, then the DXY will just continue up. But that doesn't mean that we can't continue up without a slightly deeper correction than where we are at right now. So the initial response from this particular area of interest, and again this is just where it's kind of run out of steam, and the ECB's rate hike, so a bit of a reaction to that, has brought it down ever so slightly to almost the 10 exponential. So this has been the nature of this on the way up. So since it got particularly aggressive, since mid-90s really, it's used the 10 exponential on the weekly as basically a building block to go on to make a new all-time high. That should be really the expectation of this, given the fundamentals that go into the DXY. You know, we know that the inflation is going to be easier to deal with in America when they're kind of more or less insulated against the issues in Europe. You know, as far as gas and oil is concerned, America make more than they need. As far as food is concerned, they make more than they need. Whereas Europe is kind of, yeah, all very much interdependent with each other, and obviously when it comes to food and especially fuel, Russia is like a main provider to a lot of the countries in Europe. So that's gas mostly, and obviously oil as well. So that's all inflation, and we've looked at euro and we've looked at pound on the monthly. They do want to continue to go down on a monthly, so we're talking probably, you know, it's difficult to say, but another 18 months at least of downside versus the dollar. So that's going to allow for the DXY to continue up. But as we all know, traditional markets, especially on anything based in dollars, even our friend or enemy oil, it's all denominated in dollars, isn't it? So they're going to find some upside when DXY comes down. It's just the nature of a lower, an assumed to be lower value of the dollar. So it's a pullback. It's a natural pullback is all I'm saying. So we've got 3 drives of bearish divergence on this weekly, bigger than we have had recently. So with that in mind, this could break a little bit further, and the obvious place would be to retest maybe like the 21 exponential, which is currently floating around about 105, 106. Again, this isn't going to happen straight away, and this has happened, you know, over a period of weeks potentially. And with that, we'll allow for everything to go up. Now we've looked at Bitcoin obviously this morning. It looks relatively good. If it wasn't for the ETH merge and the CPI data, which again I think is more or less priced in. I think CPI in America is going to show another gradual reduction in the inflation rate, so I don't see a big issue there. And again, you know, when that CPI data comes through, we probably see a little bit more downside on the DXY, just as a matter of course. People are willing to put back into risk assets or just assets in general, you know, a little bit less fear in the market and a bit more, you know, let's take a little bit of let's slice some of these dollars off the giant cake pile that we've got of cash, and put it back into something, anything really, because anything valued in dollars is likely to go up. And like I say, I think that the CPI is more or less priced in, which is why we're seeing upside generally at the moment and a little bit of downside at DXY, which is also most likely a bit more of a reaction to what the ECB did last week, which is a 75 basis point rate hike. So like I say, you know, this isn't the downfall of the DXY. This is a potential 2% down on the DXY over a period of weeks. So this would favour the long position I've taken on oil. Now, you all know I've tried this 3 times. This is the 4th time lucky this time. So I'm hoping. Well, it's a bit bittersweet, really. I'm hoping that this long will take me up to the areas that I've highlighted. So first of all, would be looking to see this area 97, but realistically, I think over $100, back up to about 104, 105 is the most likely area. And gold, obviously, we look back at this now, and we've been looking at this on the live streams for a little while. You know, this is a flat horizontal to which we seem to be moving from, and if we just move on to some moving averages, we can see that this is backed up by the 200 exponential and simple moving average. So this is now a super strong area of support, and so I would expect to see gold start to move up as well. So gold up, oil up, markets up, probably Bitcoin up. So let's get this ETH merge out of the way, see where the land lies after that, and if Bitcoin is still floating above, I would probably say it's got to be above at least 20,000, but probably a bit higher than that, really. We can start to take what could be the beginnings of a bull market seriously. But remember, the Dixie isn't finished. The Dixie's only finished when the Fed says it's finished. This is an extremely bullish chart. The next major area of any kind of particular interest marked off on the chart alone would be this rising channel that we've been in since, well, mid-noughties really, and we'd be looking for this to be tested. Again, this is just a formation in a sea of fundamentals that suggest that this will continue to go up over time. You know, this year and next year, and maybe even the year after that. Recognise what the Dixie is and what it represents. It's not looking good for Europe, and it's looking definitely a bit better for the US. So it's not anything that we can really particularly pay too much attention to on this chart, although we can mark off certain areas and recognise potentially, you know, a bit of downside maybe over the next few weeks, followed by continued upside to what, 114, 115. Maybe we get a natural rejection there, but it's going to be impossible to spot a top on this chart on its own. The top will be told to us, it'll be given to us, handed to us by the central banks, mostly going to be the Fed. Right, I'm going to leave it with you there, but it's, like I say, maybe once ETH is done and that merge takes place and we see whatever happens after that, the charts generally speak to at least a little bit of upside across the next few weeks, given what we're seeing here at the moment. But this week is still for me, like, you know, relatively undecided with those 2 events, CPI, but mostly the ETH merge. But obviously that's not going to impact oil at all. I'm very much in favour of this long working out, and I would probably favour gold working out as well to go on to make new all-time highs. Right, thanks for watching. Hope you have a nice day. Take it easy.